Bitcoin is crashing. Just a short time ago, it was trading near record highs. Now it's falling sharply, and investors are asking the same question. What happened? The answer isn't one single event. Several factors are hitting Bitcoin at the same time. Let's start with one of the biggest reasons, Bitcoin ETFs. Over the past year, spot Bitcoin ETFs brought billions of dollars into the cryptocurrency market. These funds made it easy for regular investors to buy Bitcoin through traditional brokerage accounts. As money flowed into these ETFs, Bitcoin's price surged. But now the opposite is happening. Investors have started pulling money out. When ETF providers experience withdrawals, they often need to sell Bitcoin. More selling pressure usually means lower prices, and that's exactly what we're seeing. But ETF outflows are only part of the story. Another major factor is where investors are putting their money instead. Right now, artificial intelligence is one of the hottest areas in the market. AI companies have been attracting huge amounts of investment. As a result, some investors are moving money out of crypto and into AI-related stocks. There is only so much money available. When one asset becomes more attractive, another often suffers. And at the moment, AI appears to be stealing some of Bitcoin's spotlight. Then there's Michael Saylor's company, Strategy. For years, Strategy became famous for buying and holding enormous amounts of Bitcoin. Many investors viewed the company as one of Bitcoin's strongest supporters. So when reports emerged that Strategy had sold some Bitcoin, the market paid attention. The amount sold wasn't enough to crash the market by itself, but it changed sentiment. Some investors began wondering whether one of Bitcoin's biggest believers was becoming less confident. In markets, perception matters. Sometimes the reaction is bigger than the actual event. There's also the issue of interest rates. When interest rates are high, safer investments become more attractive. Investors can earn decent returns from things like government bonds and savings products. That reduces the appeal of riskier assets. And Bitcoin is still considered a risky asset by many investors. As expectations for interest rate cuts get pushed further into the future, Bitcoin often struggles. But there's another force making the decline even worse: leverage. Many crypto traders borrow money to increase the size of their positions. This can amplify gains when prices rise. Unfortunately, it also amplifies losses when prices fall. Imagine a trader using borrowed money to buy Bitcoin. If the price drops too much, their position can be automatically closed. This is called a liquidation. When thousands of traders get liquidated at the same time, it creates even more selling pressure. That pushes prices down further, which triggers even more liquidations, and the cycle repeats. This is one reason why Bitcoin crashes can sometimes happen so quickly. A small decline can suddenly turn into a much larger one. So, should investors be worried? That depends on your perspective. While the current drop is significant, it doesn't appear to be caused by a major fraud, exchange collapse, or catastrophic failure within the crypto industry. This isn't another FTX situation. Instead, the decline appears to be driven by a combination of ETF outflows, weaker investor sentiment, money moving into AI stocks, concerns about interest rates, and leveraged traders being forced out of their positions. In other words, this looks more like a market correction than a system-wide crisis. Of course, nobody knows exactly what Bitcoin will do next. It could continue falling, it could stabilize, or it could recover if investors regain confidence. But for now, these are the main reasons Bitcoin is crashing.